Right, hi everyone. Welcome to today's pre-market analysis session brought to you by IC Markets. Right, hi Ren, hi Nick. Good to see you all as well. Right, great to see everyone tuning in. All right, great. Welcome everyone to once again to the pre-market live session brought to you by IC Markets. Right, before we start, take note that this is marketing communication. It does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital and should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years: 2019, 2020, and 2021. Right, before we dive into the charts and trading view, right, we're going to take a look at the economic calendar for this week and see what's going to take what we should be focusing our attention on. There's quite a few things going on, but I'd just like to bring your attention to the Australian CPI that's out on 28th of August. That's Wednesday. We have preliminary GDP data for the second quarter of 2024. That's on Thursday, 29th of August. And we have the PCE price index. This is the Federal Reserve's preferred gauge of inflation, and that's out on Friday. Hi Nick, yes, definitely. We'll definitely be starting off the analysis on the dollar index, and then we'll work our way down through the major currency pairs, the commodities, and the indices, and of course, if and any other requests that you may have as well, right? So for those who may be new, right, please do drop your requests for any instruments in the chat box, and I'll be more than happy to go through the analysis with you, right? Just drop them in the chat box early, like what Ren has done as well, right? Right, definitely Ren will be covering the Aussie and cable as well. Right, okay, so this is the calendar for this week. As I mentioned, there's quite a few things going on. On Monday, 26th of August, we've got the German IFO business climate that's out at 8 a.m. GMT time, followed by durable goods orders for the US later on at that day, on Monday, sorry, at 12:30 p.m. GMT. On Wednesday, right, as I mentioned earlier, we've got inflation data out of Australia that's at 1:30 a.m. GMT, followed by preliminary GDP data for Germany and for the US on Thursday, right? For Germany, I believe there's not a tentative time that's been scheduled, but for the US, we'll see GDP data for the second quarter coming out at 12:30 p.m. GMT. And of course, on Friday, the 30th of August, we have CPI data out of the EU, right? That's at 9 a.m. And finally, we have GDP data for Canada, as well as the highly anticipated PCE price index out of the US, right? The PCE price index is the personal consumption expenditures price index, right? It's another inflation gauge, and it's actually the Federal Reserve's preferred inflation gauge as well. So that's out at 12:30 p.m. GMT on Friday, 30th of August. Now, taking a slightly closer look at inflation in Australia, right? On the left, I have the annualized rate. I have the quarterly rate on an annualized basis, and on the right, I have the monthly CPI data also on an annualized basis, right? So since the end of 2022, we've seen inflationary pressures in Australia dissipate quite strongly, right? It was as high as 7.8% in the fourth quarter of 2022, and it dropped at 10% in the first quarter of this year. However, we've seen a slight reacceleration in prices in the second quarter of this year, with CPI rising from 3.6 to 3.8% year over year. And when we look at it on the monthly CPI data, we can see why. We can see slightly strong price increases in the months of March and April. However, we saw a very strong jump in prices in the month of May. And finally, for April, we see prices starting to taper down a little bit lower to 3.8%, right? We saw this, I think, May's figure came in at about 4% year over year. Now that's eased down slightly to 3.8%. So this explains the this explains the reacceleration in prices in the second quarter of 2024 in Australia. Now, looking at the forecast, right? So the forecast for this or the latest forecast, which is for the month of June. Take note, this is for the monthly CPI, right? This forecast here, or this data point here, is going to be for the monthly CPI data. So you can see the previous month came in at 3.8%, and we are expecting 3.4% for the month of June. So we're expecting further dissipation of inflationary pressures, down from 3.8% to 3.4%. So we do see the result coming in line with the forecast, right, or perhaps even coming in slightly lower than the forecast. We can expect the Aussie to come under some pressure and lose some steam, right? So should we see CPI data in Australia match the forecast of 3.4%, or perhaps even come in lower, we can expect the Aussie to lose steam, right? As we've seen over the last couple of weeks, the Aussie has risen very strongly, right? And softer prices could finally cause it to lose some steam. Conversely, if we do see a much stronger than anticipated result, if we get a result that's going to come in at about maybe 3.5 or 3.6% year over year, that's definitely going to function as a potential bullish catalyst for the Aussie, right? Take note of how this data point is going to drive the direction of the Aussie on Wednesday, 1:30 a.m. GMT. Right. Then on Thursday, we've got the preliminary GDP data for the second quarter in the US. Right. So we had the advanced estimate come in at 2.8%. Right. The advanced estimate for Q2 GDP came in at 2.8%. Right. A nice acceleration from the first quarter of this year. And the current the preliminary forecast currently remains unchanged at 2.8%. So we're expecting GDP growth to remain at 2.8% in the second quarter of this year in the US. What was a strong second half, right? When we look at the third and fourth quarter results of 2023, we saw significant increase in GDP output, right, with GDP growing 4.9% and 3.4% respectively the third and fourth quarter of last year. We saw quite a significant slowdown in the first quarter as well, although we did see GDP growth, but compared to the second half of 2023, we saw first half and the first quarter of this year start off on a slightly slower foot. But we're seeing a nice pickup now in the second quarter of this year. So should we see GDP data come in line once again with the forecast of 2.8%, right, or perhaps even slightly higher, this could potentially function as a near-term bullish catalyst for the US dollar, right? We've seen the US dollar sell off very sharply over the last few weeks, right, especially over the Jackson Hole Symposium as well. Remember, we had the Jackson Hole Symposium over the weekend, and with Chairman Jerome Powell sounding pretty dovish, we saw the dollar sell-off accelerate last Friday as well. And finally, we have, and just taking a quick look at US Composite PMI. Composite PMI, which measures the combined PMI activity for both the manufacturing and services sector. We can see for the months of May to July, we've seen it expand quite strongly, and the flash forecast for August came in at 54.1% as well, signaling pretty strong overall business activity, right? So growth remains strong, particularly which is led primarily by the service sector, which saw solid and increased expansion. However, manufacturing has declined for the second consecutive month, so we've seen manufacturing manufacturing activity contract, but overall activity is being led by the services sector. Hence, we're seeing strong PMI activity as well. So looking through from July to August, right, we're seeing strong PMI activity. So we can at least expect GDP output to come in and match 2.8% at the very least. And finally, we have the PCE price index. On the left, I have the chart for headline PCE, and on the right, I have the chart for the core reading. We can see these are both on the annualized basis, and we can see in the second quarter of this year, we've seen inflationary pressures pull back as well, with headline PCE dropping from 2.7% in April, dropping down as low as 2.5% in June. Conversely, and similarly, at the same time, we see the core reading moderate lower from 2.8% in April down to 2.6% in June. So we can see price pressures continuing to dissipate further in the US. So should we see this PCE price index continue to register another month of softer than expected data, or it registers another month of cooling, we can definitely expect the US dollar to come under selling pressures once more. All right, okay, with that, now let's move on over to the charts and trading view. and begin our analysis, right? Of course, as usual, we'll be starting the analysis on the dollar index, right? And we can see this strong down candle here on Friday, 23rd of August, right? So this was the day we had the Jackson Hole Symposium, where Federal Reserve Chairman Jerome Powell delivered his opening address and speech as well, right? So this triggered, he was very clear with the upcoming rate cuts in September, which triggered a strong sell-off in the dollar as well. We can see the US dollar has been selling off very sharply since the end of June, right? So, which of course then is going to cause the dollar index to head down south as well, right? We had a combination of softer inflationary data in July and early August, right? We saw softer CPI and softer PPI data, which caused the dollar to sell off. And then also on Friday, 2nd of August, if you remember, this was non-farm payrolls day as well. And earlier in the week, 31st of July, we had ADP employment report. Both of these reports came in soft, right? It showed the labor market was starting to cool quite significantly as well. And also, not only was non-farm payrolls day on Friday, 2nd of August, we also saw the release of the unemployment rate, which saw it continuing to rise as well. So we had softer inflation, labor market data in the last week of August and the last week of July and beginning of August, which also triggered another strong sell-off in the US dollar, which has continued last towards the end of August as well. Right, and of course, once again, we had the Jackson Hole Symposium last Friday or over the weekend, where we saw Chairman Jerome Powell come out to be very dovish once more, causing the dollar index to reverse from about 101.45 to drop as low as 100, right? So you can see when we zoom out a little bit on the daily time frame, we can see the dollar index is currently testing a significant support level here. It's actually broken through what was previously the first support, right? This was previously the first support or the pivot for the dollar index, right? We see a very nice significant hang on, here we go. We see a significant swing low taking place here at the end of December, right? Specifically on the 28th of December, right? Prices stabilizing at around 100.87 before reversing to bounce quite sharply. As of now, it looks like it's making a bearish breakout through this level, and the next major support that I see for the dollar index is the swing low here that occurred on 14th of July 2023. Right, so we can see two significant swing lows, the first of which is currently being tested. So we're actually looking at a potential bearish breakout for this week. Right, let's see if this bearish breakout can continue. So what we are going to do is we're going to be identifying this swing low here, this swing low support level here at 100.83 as the pivot level for this week, and we are expecting this bearish momentum to continue. So we're expecting the dollar index to continue to break lower below the pivot here and rise and drop towards what is now going to be the first support here, which is this swing low at 99.72, which occurred in mid-July. Right, so we're looking for a bearish breakout, or rather the bearish breakout has already occurred through the pivot last Friday. What we're looking for is further bearish momentum to drive the dollar index lower, right? So we've already experienced a bearish breakout occur last Friday, right, with the candle closing below this pivot level here. So we are expecting the dollar index to drift even lower today as well, right? As markets open today, we're expecting it to fall, resume the downtrend here. Now that it's also sort of stabilized here, we can also draw Fibonacci retracement, right, starting from this high here on the 28th of June, going down to the low of last Friday, right, when we pull up all the fibs. We can see, right, there's a nice pullback resistance level here that occurred on Thursday, right? We can use this pullback resistance at 101.51 to identify the first major resistance, right? And if you look a little bit higher, there's a nice pullback level here, right? This was a pullback support level in the past that occurred in the first and second week of January. But this pullback level now can also be used to be identified as another second resistance as well. Now looking at the Fibonacci retracements, we don't really see any of the retracements align well with the define resistances, so that's fine. Let's not force a Fibonacci level into our analysis if it's not appropriate. Right, and if I were to identify the next major second support for the dollar index, wow, we're gonna have to zoom out quite a fair bit, and where that could potentially be, it could be around this level here, which occurred on March of 2022. Right, in March of 2022 we see a nice pullback resistance level here. Right, this was a nice pullback resistance level that was in place from 7th of March till the 28th, sorry, till the 4th of April. Right, so we saw a period of nearly 4 weeks. The dollar index couldn't break above 99.29, and after that it finally did break above this level in the first week of April. So what was previously a pullback resistance level could now potentially function as resistance. So we can use this level here to identify as a potential second support. Right, so second support is at this pullback support level at 99.23, and the first major support is this swing low here that occurred in mid-July 2023 at 99.77. Right, let's see if we can run any other Fibonacci extensions. Right, let's say I'm going to run a retracement from here, 8th of March up to this high here on 16th of April. We're going to be looking for the key extension levels, which sit at 100. We can clearly see 127% has been broken, but we can see the 161 extension level aligned very well with the first support, which is the swing low that occurred in mid-July of 2023. So let's just keep 161% and get rid of 127. Right, I think there's also a Fibonacci projection that we can use. Right, so we're going to run this projection from here. The starting point is going to be here, 0.1 on July 30th down to 6th August, and ending with 8th August. Oops, hang on, 0.2 should be here. Right, and if you look at all the projection levels, right, the key projection levels are 61, 78, and 100%. We can see it has actually smashed through all the projection levels, and of course as recently as last Friday breaking through the 100%. So right, that's fine. Let's not keep this projection anymore, because looks like we could really have a continuation of this downtrend here. So we're expecting this bearish breakout to extend further today. Right, okay, and of course we also see the dollar index continuing to trade underneath the bearish Ichimoku cloud, right, when the cloud turns red, right, when it transitions from green to red, and of course with price trading underneath the cloud, it highlights the ongoing bearish momentum. Right, and then looking at the RSI and stochastic indicator, right, we did see both of these two momentum indicators highlight a potential oversold condition last Wednesday, right, with RSI dropping as low as 25, stochastic oscillator dropping as low as about 5. We did see on Wednesday, 21st of August, these two momentum indicators highlight a potential oversold condition, and we did see the dollar index retrace higher on Thursday, right? We did see it retrace higher on Thursday, coming as high as about 101.60. However, Friday was a big down day as well, as the dollar index broke through 101 and then dropping as low as 155. Now, once again, these two momentum indicators are highlighting a potential oversold condition, as we see here on Friday. On Friday, we see RSI dropping as low as 26, and of course, stochastic oscillator dropping as low as about 4, I believe, or 5 once again. So it does seem to be highlighting oversold conditions. So do watch out. We could expect this this index to retrace a little bit higher as well, right? Although we see a nice bearish breakout occur last Friday, we see a nice bearish breakout take place through this swing low at 100.89. We do see the RSI and the stochastic oscillator both highlight an oversold condition, so do watch out as well. We can probably expect a little bit of retracement to the upside as well. The last time we saw a strong oversold condition was like this on Wednesday, 21st of August, and something similar occurred on Wednesday as well, 17th of July. 17th of July, we saw RSI hit 31, stochastic oscillator hit about 6 as well, and we did see the dollar index stabilize at around 103.65 and retrace higher as well. And prior to that, just one more example of an oversold condition was probably here as well. On 5th of June, we see actually RSI dropping as low as 38 on the 3rd of June, and then we saw stochastic oscillator drop as low as 8, I believe, on 5th of June, and we actually did see the dollar index stabilize at around 104 for a few days before bouncing higher, right? So although we do see a potential bearish breakout take place last Friday, but however, do be cautious as well, because we do see the RSI and the stochastic oscillator highlight a potential oversold condition, so we could also expect the dollar index to perhaps stabilize, maybe retrace a little bit higher for a couple of days before resuming the downtrend, right? So this is what I've got for the dollar index, right? I'm on a daily time frame. These are the key resistance and support levels as well as the pivot. We actually saw a bearish breakout take place through the pivot last Friday. It's just a question of whether this downward momentum can continue. It's quite likely it's going to continue, but however, at the same time, we do see the RSI and stochastic oscillator indicate a potential oversold condition, so do watch out. We may see the dollar index stabilize, retrace a little bit higher for maybe a couple of days before resuming the downtrend, right? So the key levels for the dollar index. Then we'll move on over to the cable. I will cover the euro first, and then we'll go cable, right? And then we'll look at Aussie, right? So of course, with dollar index selling off very sharply since mid-June, or rather the end of June, of course we see the euro climbing steadily as well, right? It's stabilized at around 1.0680 at the end of June, rising as high as 109.50, pulling back quite sharply down to 1.0790 at the beginning of August, before rising very strongly over the last 3 weeks, right? We can see it has already broken above the previous resistance here. This was previously a swing high resistance that occurred on 27th of December last year, and we saw this bullish breakout take place on 20th of August, right? So the bullish breakout occurred on 20th of August. 21st was also a strong day, but we did see a relatively strong pullback on Thursday, and it found support at exactly the previous resistance level. Remember, what was previously a major significant resistance level can then potentially function as support, which is what has happened very nicely on Thursday, 22nd of August. So quite clearly, the first major support for the euro is now at 1.1106, right? And we saw it climbed very strongly once again on Friday, 23rd of August, right? So for this week, right, the next major resistance for the euro is this swing high resistance, which occurred in mid-July, right, with the euro rising as high as about 1.1275. So we're going to be using this swing high resistance to be identified as the pivot, right? We're going to use this level to be identified as the pivot here. So we're expecting make a run towards this pivot level here, right? We're expecting it to make a run towards this pivot level here, which is actually a swing high resistance. It's a significant swing high resistance which occurred in mid-July of 2023, and we can actually highlight this level here, this entire swing high resistance here as a zone. As you can see, the top of this wick rising as high as about 1.1285. Right, now if the pivot is this swing high resistance here, where is the next possible resistance? Right, we're going to have to zoom out quite a fair bit and look at what has happened here in February of 2022. So looking at it here, the next major resistance that I see is this pullback level here. There's a pullback resistance level here that's occurred in February of 2022 at around 1.1375. I think that's where the next major resistance could be identified for the euro here. Let me just come back to where price is currently trading and see if there's anything else, or maybe is there this pullback level here that I could use. Is there something else that I could use here at 1.1306? Okay, maybe but I think because this level here is a little bit too close to the top of this wick here, so I think I'm quite inclined to use this pullback resistance level here that occurred in February of 2022 at 1.1373 as the first major resistance. And then of course the current pivot is actually a multi-swing high resistance that occurred in mid of July, and we're expecting the euro to make a run towards this pivot level here, right? So we saw a nice bullish breakout occur on Tuesday 20th of August. We saw prices pull back on Thursday, finding nice support here before bouncing once again, and it looks like is going to make a run towards the pivot here, which is a swing high resistance that occurred in mid-July, right? Okay, and looking at stochastic and RSI as well, right? Looking at stochastic oscillator and RSI, the last time on the daily time frame we saw these two momentum indicators highlight a potential overbought condition was on Wednesday 21st of August. RSI hitting as high as 75, stochastic oscillator hitting about 100 as well, when we did see the euro stall at about 1.1567, pull back quite strongly on Thursday before resuming the uptrend. Now once again it does look like this two momentum indicators are highlighting a potential overbought condition as well, so take note, we may see prices maybe pull back a little bit first before resuming the uptrend. Now, alright, okay, so we've had the euro, so now let's move on over to cable. So similarly as well, right, market structure between the euro and the cable is very similar, of course, as you would expect, and we can also see that previously the cable has broken through a previous resistance as well. This is a nice swing high resistance that occurred on 17th of July, and we saw the bullish breakout occur on 20th of August, and we saw a nice resumption, and then we saw the bullish momentum extend, right? There was no pullback, although the euro we did see a nice pullback. However, for the cable we actually see it continue to rise very strongly, and as of last Friday it has actually made a bullish breakout through this level here as well, right? So we've seen it make, this was a swing high resistance, right? This was a swing high resistance that occurred on 14th of July, right? We're going to use this level as the pivot because we have a potential bullish breakout on hand, right? We have a bullish breakout that took place last Friday, and we can probably expect price to continue to rise higher, right? And this swing high resistance, or rather this previous swing high resistance at 1.3008 can now be used as a potential support level as well, right? So this is now going to be our first major support for the pound or the cable at 1.3008. Now what about the next major resistance? Next major resistance is going to highlight, we have to zoom out pretty far, and I see a nice pullback level taking place here, right? A pretty decent pullback level taking place here at 1.3260 on 22nd of March 2022. So this is how we've identified the first major resistance for cable, which is the pullback resistance that occurred in March of 2022. Right, hi Andre. Right, okay, yeah. Well, not entire. Yeah. Well, you can say I'm more of a swing trader as well as also momentum trader as well, right? So I'm not only looking for swings, well, in the sense of potential bearish and bullish reversals, but also looking at potential breakouts as well, right? Yes, yeah. So I'm more of a slightly longer term trader, right? Like I'm not, yeah. So I usually use, and of course on Monday we always use the daily analysis, right? We will always begin Monday's pre-market analysis on the daily time frame to give us that overview for the whole week. And if you tune into the other the upcoming webinars for IC markets for the rest of this week, we'll be using the 4-hour time frame or even the lower time frames to establish the key support and resistance levels. Alright, so coming back to cable, right, we've seen it make a couple of bullish breakouts since mid-July, right? The first bullish breakout occurred in was through this swing high resistance that occurred in mid-July, right? So the bullish breakout took place on 20th of August, right? We see a nice breakthrough this prior swing high resistance, and we are seeing now we saw last Friday another strong bullish breakout take place through the pivot here. So this pivot which was previously a swing high resistance, can now potentially function as a pullback support. And we are probably, I mean, we're expecting the cable to make a run towards the first resistance, which is this pullback resistance level here that occurred on March of 2022. Right, and but however, take note at the same time, right, similar to the euro as well, we are seeing a potential overbought condition being highlighted by the RSI and stochastic oscillator last Friday, right? Last Friday we saw RSI hit 75 point, almost hit 76. RSI being elevated at around 97, 98, right? Something similar that we saw in mid-July as well, right? So around mid-July, we saw RSI climb above 70. We also saw the stochastic oscillator hit about 97, 98, and we did see the cable stabilize, or rather stall at around 1.3040 before reversing quite sharply to drop lower. Right. So once again, I'm not because we see these two momentum indicators highlight a potential overbought condition. I would say be mindful of any long uh, uh, positions for cable as well, right? I still do think we can see cable and the euro make a run towards its respective resistances, but at the same time we should be treading with a bit of caution here, especially when we see on the daily time frame the RSI and stochastic oscillator indicate overbought conditions. Is quite likely we could see the increase, right, or the rate of increase for these currency pairs to probably slow down quite a fair bit. Another time we saw an overbought condition as well was here in 27th of May, right? We did see RSI hit 69, our stochastic oscillator hit about 92. We did see the cable pull back for a couple of days, stabilize before resuming the uptrend as well. So maybe we're going to be looking at more of market structure or market action, price action such as this, something similar to what we saw at the end of May, right? We did see cables run into resistance at around 1.2770, pull back for a couple of days, consolidate, and perhaps maybe continue to make a run higher as well, right? So take note, we're seeing a lot of strong bullish momentum for the euro and the cable. However, at the same time, do tread with a little bit of caution because we do see the RSI and stochastic oscillators indicate a potential overbought condition. And when you look at in the past, as what has happened in the past, as highlighted by the horizontal lines, we do see usually at this moments in time that the rise in the respective currency pairs sort of stall as well, right? So do take note of that. All right. Okay, all right, okay, Andres, with regards to the IC markets webinar, right, we do the pre-market analysis is what we currently do now, and then on Monday at 9:30 a.m. GMT, we also have another live analysis session that is usually covered by me as well. Pre-market is usually done by Melanie and myself, right? Melanie and myself, we rotate the pre-market analysis, and then on Mondays, 9:30 a.m. GMT is another live analysis session that's usually done by me as well, right? And of course, there's other topics, educational topics, and my colleagues as well who will present on other days as well. Right, hi Yaya, good to see you. Right, okay, using oscillators as well on the daily time frame, as I mentioned, right, using momentum indicators such as the RSI and stochastic oscillator, right, when you look at them on the daily time frame, it really helps us to identify potential overbought and oversold conditions, all right? So what we are currently seeing are overbought conditions for the euro, right? We're seeing that for the euro. We're also seeing it for the cable, right? It's just something to be aware of as well. When prices get overextended in a certain direction, right, we can use these indicators to help us identify potential overbought conditions as what we currently see, and also oversold conditions. The last time we saw a strong oversold condition for cable was around 7th of August, with RSI dropping as low as 37, stochastic oscillator dropping as low as about 15. We did see cable stabilize at around 1.27 2680 for a few days before reversing to climb higher, right? Similar to the oversold condition on 27th of June as well. RSI dropping as low as about for 40, stochastic oscillator dropping as low as about 12. We did see the cable stabilize at around 1.2610 for a few days before reversing to climb higher. So it's something to take note of as well to identify the really overextended moves, whether it's overextended to the downside or overextended to the upside, right? So as of now, the current situation is what we see, as what I see on the RSI and stochastic oscillator. We are seeing a potential overbought condition for the cable, similar to what we saw in mid-July. So do take note, this strong run up here could potentially stall in the next 1 or 2 days. Similar for the euro as well. We're seeing a potential overbought condition, something similar to what we saw here on hang on, where did it go? Right, something similar to here to what we saw on the 17th of July. Conversely, when you look at the dollar index, we are seeing a potential oversold condition as of last Friday, right? Similar to the setup that we saw on 17th of July and also on 6th of June. So take note, although we saw a nice bearish breakout occur for the dollar index last Friday, do take note, these momentum indicators are highlighting a potential oversold condition, so do watch out for that as well. All right, okay, so we've covered dollar index, euro, cable. We also will now take a look at the Aussie, right? And then of course we'll move on over to the commodities. All right, hi Watson. Yeah, okay, yeah. No, Desmond is still here, but for pre-market analysis, currently it's being rotated by myself and Melanie as well. All right, okay, so move on over to Aussie, and then we'll cover the commodities, gold and oil as well. Okay, so of course, if you're seeing the dollar index sell off very sharply, right, then of course, when you see the currency pairs like euro and cable rising strongly, we are seeing that for the Aussie as well, right? The Aussie, right, this for the Aussie previously, this was swing high resistance that occurred on 12th of July, right? This was a previous swing high resistance that occurred on the 12th of July, and we saw a potential bullish breakout take place last Friday, right? So we have a potential bullish breakout on play here, and remember is attempting to make this bullish breakout through this previous swing high resistance here at 67.84. Now, quite clearly, the next major resistance is this other swing high that took place at the end of December. So that's where the first major resistance for the Aussie is going to be. It's at 68.46. Right, again, highlight this as a strong resistance zone here. Now, what about support, right? We can see here when the Aussie pulled back sharply on Thursday, 22nd of August, it managed to stabilize at around 67 cents before bouncing very strongly on Friday. So quite clearly, the first major support for the Aussie is at this pullback support level here at 66.97. And right, okay, let's see if there's anything else. Can we do a Fibonacci extension? Remember, key extension levels set at 127, 161. Right, okay, we can see, right, although the top of this wick here coming as high as 68.71 is not exactly close to the 127 extension level, but I think just to give us to just serve as a reminder, not only do we have a major swing high resistance that occurred on 28th of December at around 68, we also have the presence of a Fibonacci extension at 127% at around 68.87. Right, so similarly for the euro and the cable, we see the Aussie making a bullish breakout through a prior swing high resistance, and it looks like it does really want to make a run for this towards the first resistance. But at the same time, I would say do tread with caution, right? Do tread with caution, because once again, it looks like we are starting to see an overbought condition develop based on the RSI and stochastic oscillator. This is something similar to what we saw on 12th of July. You can see here the Aussie hitting as high as 67.98 on 11th of July, and then on the following day, 12th of July, we saw the RSI slightly climb above 70. And of course stochastic oscillator hit about 93, and we saw the uh, Aussie stall for the next couple of days, right? It failed to break above 67.80 over the next couple of days, and it reversed very sharply to drop lower, right? I'm not expecting a very strong bearish reversal as what we saw in 15th of July. But however, take note, we can expect this current strong bullish momentum to at least stall for a couple of days, maybe consolidate, and perhaps after that resume the uptrend, right? But take note, so do tread with a little bit of caution, especially when we see these two indicators highlight a potential overbought condition, which is currently what we are expecting to be formed maybe later today, right? Maybe today or tomorrow we may see a overbought condition being formed. And the last time we saw an oversold condition for this currency pair was on 1st of August. 1st of August, we saw RSI drop as low as 26, stochastic oscillator drop as low as 8. We did see the Aussie, of course, we see a strong uh, down here, right? Down day here as well, the wick dropping as low as 63.50. But generally, we saw the Aussie stabilize at around 64.90 before reversing to resume the uptrend, right? So we saw nice oversold condition, a pretty decent oversold condition on 1st of August. The Aussie stabilized after that for the next couple of days before reversing to move higher. So currently, we are expecting to see an overbought condition being highlighted very soon here, right? RSI is still, I would say, under 70, right? RSI is only at 68. Stochastic oscillator is at about 94, 92. We don't see an overbought condition being highlighted just yet. So do tread with a little bit of caution for any long positions on the Aussie here, right? Okay, now with that, let's move on over to all right, okay, no. Hi, Party Grandpa. All right, okay. Just nice, since we just covered the Aussie, we can cover the Kiwi now, and then we'll move on over to the commodities. All right, great. Let's do that as well. So, of course, right, usually the Aussie and the Kiwi, they move in sync, right? We expect a very similar market structure, and when you look at them on the daily time frame, the market structure is somewhat similar, right? It's not a perfect replica, but it is a very similar market structure. And of course, we saw the Kiwi break out of this multi-swing high resistance as well. If you look at the Kiwi, right, is actually oops, hang on, let me, where's my right? If you actually look at the Kiwi, it's actually broken out of a multi-swing high resistance here. This was a multi-swing high resistance at 62.02 that had been in place since 22nd of February this year, right? We see it run into resistance on the 22nd of February, 8th of March, 6th of June, and 12th of June. So we can see clearly 4 significant instances where the Kiwi attempted to break out of this level here, but on all 4 occasions it failed and reversed to drop lower. However, with this very strong candle last Friday, we are now seeing a potential bullish breakout take place, right? We have a potential bullish breakout on hand. So that means what was previously our multi-swing high resistance level is going to be the pivot for this week, right? And this level here was also a major resistance, right? It was a major resistance all the way up to about 62.20. So this is now potentially going to function as a pullback support level here, right? What was a prior multi-swing high resistance can now potentially function as a pullback. It's going to be highlighted by the pivot and this zone. And of course, the next major resistance that I see for the Kiwi is this swing high here that took place at the end of December, right? This is a significant swing high resistance at the end of December last year, which is where the first resistance is going to be identified. Along with the top of the wick, we can see it rise as high as about 63.69. Now, and the next and the first major support for the Kiwi is likely to be here. And we see the Kiwi pulling back quite sharply on Thursday, 22nd of August, before it stabilized on Friday at around 61.27 before bouncing significantly higher. Right, so this is where the first support has been identified as well. Right, similar to the Aussie as well, we once again, as I mentioned, we are starting to see overbought condition being highlighted by the stochastic oscillator and the RSI. Not yet. RSI came in at about 69.98 last Friday, and stochastic oscillator is around 95. So they have yet to indicate an overbought condition similar to the Aussie, but for now do tread with caution as well, right? We are starting to see overbought conditions being highlighted for the Euro, the cable, the Aussie and Kiwi as well. All right, okay, now let's move on over to the commodities, right? XAU USD is an instrument that tracks crude oil futures, and of course, with dollar index selling off sharply or being under pressure over the last few weeks, we can expect gold prices to remain elevated as well, right? Gold also has broken through a prior multi-swing high resistance, right? This was a prior multi-swing high resistance at around $2,468 per ounce, right? We see it run into resistance here in mid-July, run into resistance again on 2nd of August, run into resistance in mid-August as well. Three significant occasions where gold has failed to break above this level, but it did so strongly or convincingly on 16th of August. And remember, what was previously a major resistance level can potentially function as a pullback, which was what happened very nicely on 22nd of August here. So we've seen gold prices make a nice bullish bounce off this pullback support level, and it looks like it could continue to rise higher towards the next resistance. Remember, this level here, this is the all-time high, intraday all-time high for gold, right? This is the intraday all-time high for gold at $2,531.72 per ounce, right? So with this instrument trading close to its all-time high, how could we possibly identify the next major resistance, right? In such a scenario, we can rely on Fibonacci tools such as projections and extensions. So let's try out with an extension first. So we're going to run a retracement from here, 17th of July down to this low on 25th. Key extension levels are at 127 and 161, and we can actually see it is actually tested this extension level here on 20th of August here, right? So we can put I would probably, yes, highlight this as the first resistance here for gold. First resistance is going to be at the 127% extension, which is at 2519.19, and the second major resistance for gold is going to be at the extension at 161%. So we can see here in such a scenario, when we don't have any prior swing high overlap or pullback resistance level to reference, we have to rely on Fibonacci tools such as extensions and projections. I'll try and give an example of a projection after this. But before that, like in terms of support, there's a pretty decent pullback support level here that took place. Pretty decent pullback support level that took place at 2,438, right? Maybe this is not the strongest pullback level, so I'll probably identify it as an intermediate support. But where I see a strong major pullback support level is here at $2,382 per ounce. Is where I see the first major pullback support level for gold. Right, let's see if we can do a Fibonacci projection here. Right, okay, maybe let's see for gold, because this is right, okay, and let me just reevaluate the thing. I think what I'm going to do for gold here is this is going to be the first resistance identified by the 161% extension. The pivot is going to be identified by the 127% extension, and of course what was the prior multi-swing high resistance is going to be the first major support here. So I think we can probably expect a little bit of a pullback, right? We'd probably expect a little bit of a pullback for gold prices here. Right, you can probably expect a little bit of a pullback for gold prices off the pivot here. Now we can also run a Fibonacci retracement starting from this low up to this high here. Let's pull up all the fibs. Do we have anything that aligns with the first support? Yeah, I guess you can probably see there's 23.6%, right? I believe there's a 23.6% here. That aligns pretty well with the first support. right? And let me see if we can do a projection as well. uh, right, a projection, a pretty decent projection level to start from would probably be from here: point 0.1 on 26th of June, point 0.2 on 16th of July, and point 0.3 on 25th of July. Remember, key projection levels are at 61, 78, and 100%. Let's see where they currently sit. Right, we can see that the 100% projection level aligns pretty well with the extension at 127%, and we of course can see 61 and 78% being taken out. So let's just keep 100% projection here. So in this case, the pivot has the presence of a Fibonacci confluence, right? Okay, let me see if we can zoom in a little bit here to make this a bit more clearer. So what we're seeing is around the pivot level here, which is around $2,520 per ounce, is a strong Fibonacci confluence. So what do we mean by that? It simply means you have more than one Fibonacci level at a particular price level or at a particular price zone. So in this case, we have the 127% extension and the 100% projection between 2,519 and $2,520 per ounce, right? So this strong resistance level here has been identified by two different Fibonacci levels: the 100% projection and the 127% extension. So because of this strong Fibonacci confluence, we can probably expect gold prices to stabilize or stall around the pivot level here and make a pullback towards the first support, right? So this is one of the key levels for gold that I see for today. Right, okay, with that, now I'll move on over to crude oil as well, and then we'll cover the indices. Right, so crude oil has seen a nice bounce as well. We see a nice multi-swing low taking place here. Right, if you look at it here, this was a multi-swing low support that has been in place since 4th of June. Right, the first swing low taking place here. Oops, hang on, here we go. On 4th of June, another nice swing low taking place here on the beginning of August, and of course as recently as last Wednesday and Thursday, another swing low taking place as well, right? So this level here was a multi-swing low support, which has indeed functioned as a very significant support level, and we see crude prices bouncing higher. So remember, XTI USD is the instrument that tracks the WTI crude oil futures. So quite clearly, the first support has been easily identified by us, by this multi-swing low support here, right? This is pretty much a no-brainer, right? This is very clear on the daily time frame. Now, where could we see price potentially stalling, right? Of course, I see a significant resistance level here. This is at $80 per barrel, right? A significant resistance level here taking place on 12th and 13th of August. We can also see that this level here ran into resistance at around 25th July till 1st of August, like a pullback resistance level here, and then a swing high resistance level in mid-August. Right, now with price rising strongly here, we can also run a Fibonacci retracement from this swing high on 12th of August going down to the swing low on the 21st. Let's pull up all the fibs. I think it's already broken through the 38 and 50 as well, right? Okay, it's approaching the 50%, right? So I do think where for this week at least, I see a pretty decent pullback resistance level here, which is at $77.50, which I'm going to be identifying as a pivot point for this week, which also happens to be a level that has a presence of a 61.8% Fibonacci retracement. Right, we can see this 61.8% Fibonacci retracement level here, right, aligns well with this pullback support. We can see here on Wednesday, 14th of August and 15th of August, crude prices stabilizing at $77.50. So what was previously a pullback support level here could now potentially function as a resistance, right? So we see a nice pullback support level here that took place on 14th and 15th of August. This could now potentially function as a resistance. So we probably can expect crude prices to rise up towards $77.50 and potentially stall around this level here. Right, and not only that, I think we've also seen a nice bullish breakout through this descending trend line, right? I believe there was a pretty decent descending trend line. Okay, not the best descending trend line on the daily time frame here, right? We can see just only a couple of touches at the top here, one touch at the swing high, one touch here on 16th of August, right? Not the best descending trend line, but we do see a nice breakout take place last Friday as well. All right, so take note, these are the key levels for XTI USD. So this is the instrument that tracks WTI crude oil futures. I think we can expect crude prices to potentially climb higher as markets reopen this week, and where it could run into major resistance is at this pivot level here at $77.50 per barrel, which also has the presence of a 61.8% Fibonacci retracement. Right, before we move on to the indices, right, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar. Right, truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue with the indices as well. Right, let's move on over to the US 500. Right, we've seen a very strong recovery in global equity markets since this strong sell-off in the beginning of August. Right, we saw global equity markets stabilize around the first week of August, right, and around maybe on between Tuesday and Thursday, right. We saw global equity markets stabilize between Tuesday and Thursday, and we see a very strong bounce in global equities with US 500 coming close or attempting to recapture its all-time high, right. We can see here previously this level here. Okay, the intraday all-time high for US 500 was formed on 16th of July at around, let me see, it is as high as 5,673.33. So this was where the all-time high for US 500 sits, the intraday all-time high. So this is where the pivot has been identified as a swing high resistance at the all-time high. All right, great, good to see the feedback come in. All right, truly appreciate it. Thanks everyone. Right, so of course this is the pivot level for US 500 for this week, 5,669.89. right. We can expect this index to climb higher towards this level here and perhaps make a pullback as well. We see a very strong bullish momentum, but also we see a significant swing high resistance close to the all-time high. So this is a place where this instrument could stall and make a small pullback as well. So where I see a nice pullback level, support level here, yeah, right, there's a nice overlap level here at 5,564. We can see that previously this level functioned as a pullback resistance on 23rd of July and 1st of August. This was a pullback resistance back then, after which it proceeded to function as a nice pullback support on 22nd of August, thus creating a overlap support here. So the overlap support has been identified as the first support level in our analysis at 5,564.72, and we have a nice swing high resistance here close to the all-time high that has been identified as the pivot. So now in such a scenario, how can we possibly identify the next resistance? Remember, price is trading close to the all-time high. So in such a scenario, we have to rely on Fibonacci tools such as projections and extensions. So I think let's try with a projection first, right? We'll start from here, point 1, 19th of April, going up to the intraday all-time high on 16th of July and ending with the low on 5th of August, right? So key projection levels are at 61%, 78.6% and 100%. So clearly 61.8% has been surpassed, but we can keep 78.6 and 100%. Now we can also run a Fibonacci extension to find extension levels. We're going to run a retracement starting from here, 1st of August down to this low on the 5th of August. Key extension levels sit at 137 and 161%, and we can see now we have Fibonacci confluence close to the projection levels, right? We see a nice Fibonacci confluence here being highlighted by the 78.6% Fibonacci projection and the 127% Fibonacci extension, and we see another Fibonacci confluence being identified by the 100% projection and 161.8% extension. So this is how I've identified the first major resistance here, which is a Fibonacci confluence at around 5,860. Right, so although we do see a strong rise in US 500, right, it is approaching a swing high resistance close to the all-time high. It also has a presence of a Fibonacci confluence. We've got the 78.6% projection and the 127% extension level. So we can probably expect this instrument to stall around this level here, make a slight small pullback before resuming the uptrend. Right, so this is what we've got for US 500. Right, okay, so if not, that's all for today, right? We've come towards the end of today's webinar, right? Thank you all for tuning in to today's session, and do look out for the live analysis later on today on Monday, 26th of August at 9:30 a.m. GMT. And of course, do look out for all the educational topics as well for the rest of this week, brought to you by IC Markets. Right, so take note, these are the key levels for the dollar index as well. It is approaching the momentum indicators are highlighting a potential oversold condition, and conversely we are seeing something similar. We're seeing overbought conditions, of course, for the euro, for the cable, for Aussie, and potentially Kiwi as well. So we're seeing a lot of perhaps overextended moves as well. So something to take note of and tread with caution as well, right? And of course, do take note of the calendar as well. Right, there's quite a few things going on, but I just want to bring your attention to inflation data out of Australia on Tuesday, 28th of August. Preliminary GDP data for the second quarter in the US on Thursday, 29th of August, and of course the PCE price index, which is on Friday, 30th of August. And this is the calendar for this week as well. Got a few other things going on, so do take note of this. Right, all right, so thanks everyone for tuning in for today's webinar. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week. Right, I wish you all the best in your trading journey, and catch you all at the next webinar. All right, thanks everyone, take care and have a great trading week.